Wall Street's Holy Grail. Trends are the Holy Grail that every investor seeks. But why are they so hard to grasp? Because they are hidden within the most mysterious variable of all, time. Time is a riddle that even religion, physicists, and AI cannot fully explain. It determines all future outcomes, yet never reveals its answers. Just like the scene in Indiana Jones and the Last Crusade, where Indy stands before a cliff, an invisible bridge leading to the Grail. In investing, that invisible bridge is time. Why do all 6 mainstream analysis methods eventually hit a wall? Because they all rely on a single calendar system. Yet the world has over 100 calendar systems. That's why strong fundamentals can still result in plunging stocks, and bearish technical signals can precede soaring prices. We, however, use a special time system, like switching from a flat map to a 3D satellite. This is how we uncover the invisible bridge to the Grail. It powers our universal algorithm, which applies to indices, stocks, and markets worldwide. Besides analyzing the past, now you can see the future. Let's unveil how. AIA Universal Algorithm. 3 core elements define any trend: time x leadership traits x venue. When these align, they create a predictive framework applicable across all asset classes and geographies, leading you straight to the legendary Grail. One of our key models is the mirror theory. We discovered that time reflects in 60-year cycles, as though history looks into a mirror. When the 3 core parameters align, the mirror reveals future insights. For example, the Dow Jones Industrial Average, with over 130 years of data, presents at least 2 such 60-year mirrors. For instance, to forecast 2026, study the 1966 curve, if and only if the parameters match. If not, the mirror distorts. History doesn't repeat, but it rhymes, dancing in patterns, waiting for us to interpret and explore the future. The 60-year mirror, a striking pattern. America's mirror, the only 2 foreign attacks on US. Soil happened exactly 60 years apart. Pearl Harbor, 1941, and September 11th attacks, 2001. Both occurred between 7-9 a.m., with casualties between 2,500-3,000 and triggered massive global consequences. They even occurred at opposite extremes of the geographical spectrum, venue, one in the east, one in the west. What's next? China too has its own 60-year mirrors. Dow Jones Mirror, aligned parameters. When time and leadership traits align, the Dow's future trajectory reflects like a mirror. 1916, 1976, 1948, 2008, 1949, 2009, 1954, 2014. Average trend similarity, 70.5%, with minimal deviation. Statistical probability, less than 0.1%. These are not coincidences. They are echoes. Dow Jones Mirror diverged parameters. When time aligns but leadership traits diverge, the mirror breaks down. The curve becomes erratic. 1932, 1992, 1946, 2006. Here, trend similarity drops to 54.5%, with large deviations and negligible predictive value. So, when parameters misalign, how do we still forecast the future? That's where deeper signals come in. Black swan mirrors. Black swans are extreme, destructive events with a less than 0.05% probability. Shockingly, even black swans can exhibit mirror behavior if the signals are strong enough. Global black swan mirrors. September 15, 2008, Lehman Brothers collapses, global financial chaos. February 23, 2020, COVID-19 crash, global markets plunge within days. Few can warn before the storm. It takes more than preparation. It takes grit to face doubt and ridicule. But these are the moments when you overtake on the curve and rewrite destiny. Billionaire black swan mirrors. James Simon's quant legend lost over 40% in 1984. Warren Buffett bought Delta and Southwest Airlines 2016, then sold both in May 2020. Delta 58.7%, Southwest 45.8%, combined losses $5 billion. What did 80 years of top investor mistakes teach us? In the market, the most dangerous thing isn't someone else, it's your own emotion. Don't place too much trust in your own emotions. Instead, learn how to choose investments that minimize emotional errors. That's where another AIA algorithm comes in. It's also a key factor in determining whether you profit or lose. Seeing the future curve. Once you understand the Holy Grail, you'll begin to see the future curve, a leading indicator based on sentiment strength. From the US, Dow Jones, global black swans, and billionaire missteps, we've identified a pattern. Invisible yet universal parameters influence trends and shape the curve ahead. Case study. In January 2025, we issued an alert on x.com/AIA index. Sell everything before February 27th. Sure enough, on April 2nd, a tariff-related black swan struck. This is just one of many examples. While we can't predict every black swan or its magnitude, if with a 130-year automated financial database helps us detect enough of them. Being right often enough creates a snowball effect, compounding accuracy, compensating for errors, and significantly boosting performance. Traditional analysis versus universal algorithm. Trends are the holy grail Wall Street has pursued for over a century. In 130 years, no method has been perfect, but traditional analysis has hit its limits, like using a flat map to fly through the galaxy. You simply can't see the curves of the future. Our universal algorithm, however, is like a 3D satellite telescope, drawing a high-resolution outline of your future trajectory. The difference in clarity from black and white to vibrant 4K is game-changing. Your investment and risk control strategy will evolve dramatically based on your level of diligence. Though not flawless, the universal algorithm is one of the best alternatives to traditional tools. Now that you hold the holy grail of trend analysis in your hands, what's your next move?